and we're going to try to do the daily financial news together. It is Saturday, May 28th. Yes, folks, every day is Saturday, especially on Saturday. I hope you're having a wonderful weekend. For most of you, I believe it will be a 3-day weekend. It's the official kickoff and start to summer. So again, have a great day. I'm going to put these guys down because I don't want to drop them. All right, so today's a big day for One Rental at a Time. We are trying to do something very different today. We will still do our live stream at 8 o'clock. I will be going live on YouTube, the platform right here at 8 o'clock. We will probably go for 45 minutes, not an hour today, because I want to get ready for our Zoom call that was sent to, or at least I tried to send it to all of my students. I leveraged the platform Teachable. I've sent out the email twice. I went to our private Facebook group. I sent it out. So we shall see. The whole idea of this platform is I'm trying to provide more value, right? I'm trying to take little topics that are critical in the course. It's been out for a couple of years and I want to go deep. I do want to record them because I want to share them. I've lined up a couple of students to share their buy boxes, but we are going to go through it hopefully in depth and really get people to accelerate the process. We will talk about the buy box on our live stream at 8 because it is extremely valuable. I don't mind giving it away for free. I think if I can help anybody get started on the right foot, that is a good idea. So today's a big day. I'm a little bit nervous because anytime I try to do new technology, I fear the boogeyman is out there and I don't know. We'll see what happens. If it doesn't work today, I know we will eventually figure it out, but fingers crossed, I will see my students at 9 o'clock Pacific. Next, we will talk about the week ahead. Lots of important numbers. Man, we already start a new month next week. It'll be June, which means we get the employment data for May, right? How many jobs were added to our economy and many other important things that we will go through in a minute. I believe the Fed has two bad choices. I believe a lot of you, a lot of the market, it almost feels like you're hoping and praying for the following. You are, I don't know, I don't want to say you. It appears that Wall Street wants the following scenario. Wants the economy to slow down, show early signs. Sure, we get the 50 basis in June. Sure, we get a 50 basis in July. Then Wall Street is starting to price in a pause for September. I don't think that's a good idea. In fact, if a pause in September is a good idea, which I admit, if the economy tanks hard enough, it might be the right choice. But let's be very clear. In order for the Fed to pause in September, in my opinion, not only does inflation have to be markedly lower, it is not, but unemployment likely has to go from from 3.6 to like 6. In order for unemployment to go that high, that fast, we have to have lots and lots and lots and lots of layoffs. In addition to that, we likely have to show a negative Q2 GDP growth, which, given everything I have seen in the retail data, doesn't seem likely, but hey, it is possible. So I think the folks hoping for a pause in September don't realize how bad the economy would have to be to get a pause. If you flip that over, there's a lot of folks, myself included, that believe the Fed will keep going and break the back of inflation, which will break the consumer, which will break the economy. It is really an interesting tug of war. The Fed was too late, too long, kind of two very bad outcomes. And again, it's becoming very clear what's going on. CPI, June 10th, big day. We've got to watch for that one in a couple of weeks. And then the consumer sentiment. We talked about it yesterday. Horrible number. We have consumer, confidence next week. We also got some data on savings. The consumer savings is now at 2013. Wasn't it just yesterday we were talking about record savings? The savings rate is now at 2008 levels. Again, we just talking about record consumer rates. And credit cards are being used at record speed. All of these things do not make me feel like the consumer is strong. In fact, if you watch my channel, you know that I've been calling BS on all these numbers. I do not believe the consumer is strong. I believe it is a lot of the K-shaped summer, right? There's a small set, maybe 30% of us that are doing fine, but then there are 70% of us that are like, what do I pick? Do I fill up my tank? Do I pay my rent? Do I buy food? It's not good and not getting better anytime soon. So again, the consumer will drive a recession. I believe it's next year, but we shall see. It could absolutely be this year. In fact, of all the things that I talk about in my 2022 and 2023 whiteboard, there's a playlist. The one that I feel least good about right now is when the recession starts. It is possible that the recession pulls forward. I do not think it starts in Q2. I do think Q2 GDP will be positive, but maybe instead of Q2, Q3, it's Q4, Q1. The economy is sick. So, all right, let's talk about what else is going on. I don't know if you've noticed this, but for a long time, crypto and the NASDAQ were correlated. If one was up, so was the other one. Here of late, it seems like the correlation has been broken, which means one goes up, one goes down. And it is interesting me to watch this. I'm not sure what it means. Does it mean that the crypto environment, people are selling out? Does it mean the buy the dip is in stocks? I don't know. But the NASDAQ has been going up the last week while crypto has continued to go down. That correlation seems to have been broken. And it was, last time I read it, I think it was like a 93% correlation. It was very correlated. It does seem to be breaking. We had some more earnings from retailers. This one, very much like Walmart and Target, was on the negative side. Big Lots. Big Lots had an earnings miss and gave very weak guidance. I think this goes back to the K-shaped summer. If you are serving the customers on the bottom end of the K, which I believe Big Lots does, I've actually never shopped there. I don't even know where one is. So maybe I'm wrong. Again, for all I know, they are very high end. Never been to one. They missed. All right, if you're serving that customer base, they are squeezing every dollar. It is truly trade down. It is truly store brand. It is truly go from Walmart, Target to Dollar General, Dollar Tree. Not a good time. Inflation is nasty and a true problem. Dell Computers, surprise to the upside. They actually called out the business consumer. It's interesting. If you go back and look at Dell or HP, Hewlett Packard, for a year and a half, it was all of us kind of buying that second computer for the home because mom and or dad needed a computer for work while the kids were doing homework. Now they're calling out the office. Are we seeing perhaps the return to office, more desktops, right? I'm sure laptops were bought for home, but desktops, they're bought for the office. Are we seeing that turnover of older PCs that haven't been touched in 2 years being reinvigorated? I don't know. Workday missed. I am curious about all cloud-based software companies. There's a lot of cloud-based software companies who essentially rent their software by the month. You sign yearly contracts, perhaps multi-yearly, but you're paying monthly subscriptions. I suspect that small and medium-sized businesses, they are going to act like consumers. What do I mean by that? Think about what consumers did to Netflix, right? Consumers went after their monthly expenditures and they started canceling some expenditures, right? We already have 7 streaming services. Do we need 7? Let's have 3. I believe what may happen in cloud-based software companies like this is there will be small and medium-sized companies that say, do we really need 50 users? Can we get by with 25? Do we really need all of these? Can we whack one? We are going to see companies retreat, just like we saw consumers retreat. It is Memorial Day weekend, and again, we are going to see record gas prices in California. Based on yesterday's number, it's over $6. At my local gas station, I spent the most I've ever spent, $6.59 a gallon. Over $100 to fill up my tank, and my tank was not empty. I was disgusted by that. Consumer sentiment, again, we'll talk about it. It fell 10.4%. We are at lows since 2011. These are horrible numbers. I believe the consumer is giving up, is scared, whatever you want to call it. Gas prices smack you in the face, food prices. Now we're hearing about layoffs. We have our savings dwindling. We have record credit card use. This can't continue. We could have a consumer-driven recession, and it may happen faster than even I expected. All right, let's talk about the week ahead. First off, Monday. There is no chance you will lose money in the stock market on Monday. Congratulations. All of you will not lose money in the stock market on Monday. That, of course, is because it is Memorial Day. Kind of a joke. But yes, Monday, the market is closed. Tuesday, we get Salesforce and Hewlett Packard. Will Hewlett Packard or HP be like Dell saying the office is returning? Salesforce. Will Salesforce be like Workday, where people are retreating? Maybe we don't need 1,000 CRM users or whatever. We shall see. Tuesday, Case-Shiller will come out with the latest housing values. Will they crash 30% like some channels are calling for? Or will they be surprised to the upside? FHFA home prices also come out. Will they again report a 30% down or decline like some channels talk? Or will it surprise to the upside? We will know on Tuesday. Also on Tuesday, we get consumer confidence. I believe consumer confidence will be a lot like consumer sentiment and disappoint to the downside. I do not have a good feeling about the consumer. We should be happy. It's summer, but we are staring at all of these inflationary things. And I think the average consumer we're just beat up. I think they're stressed. I think they're unhappy. One thing to be certain, I would not want to be an incumbent in the elections in November. I think all incumbents, red or blue, right or left, you're in trouble. I think all the people voting for you are mad, and they're going to take it out on you. Not good. Wednesday, we get Chewy. What's going on with our pets? Michael Kors. Michael Kors will be interesting. Is it like Big Lots, Target, Walmart, or is it like Nordstrom and Macy's? I think we have a K-shaped summer. We'll see what's going on with Michael Kors. Then we have ISM manufacturing. Are we bringing manufacturing back? Is it picking up, or for heaven's sakes, is it going bad? I don't know. Thursday, Broadcom, Hormel Foods. We get our first cut of May data with ADP report. Remember, ADP comes out first. It's interesting, but has proven not to be correlated with the really important number, which is Friday. The Friday report is jobs growth, the expected jobs market. I believe the expectation is 325,000 jobs created in May. Let's play over under together. I'm going to take the over. I think 325 is a really low number. We did 428 last month. I'm going to say 353. 353,000 jobs created in the month of April. We will also get some wage inflation data based on the jobs and the like. So again, these are all interesting things. The last thing I saw perhaps was the most scary housing statistic. I think I quoted this on one of my interviews, but I wanted to make sure I did it on the daily financial news because this is a problem, right? What I'm about to talk about has been a problem for years, and we are paying the price today. The starter home, the first-time homebuyer home, used to be 40% of the building stock that builders put out there. Last year, starter homes were 7% of new construction. You want to know why the housing market is broken? Affordability, sure, but it's supply, people. Builders are not building, so we are not getting that. So all we're dealing with is 1950, 1960, 1970 builds. Those are being snapped up by landlords. Those are being held and people not moving up. The front end, the affordable part, the first-time home buyer part of our market is broken. It will be broken for years unless we start building more first-time home buyers. My hope, my prayer, my belief is as the affordability hits, as more and more people cancel out of contracts, builders will have to blow out their existing tracks. My hope is in October, November, December, they start building affordable homes. I don't know how good I feel about it, but it's certainly my hope. We can't keep building 7%. It needs to double. It needs to triple. The housing market works when there's affordable homes, first-time home buyer, there's move up, there's luxury. If we lose the bottom rung or the starter home, that has a lot of problems. Wealth starts with getting on the property ladder. We have done a very bad job of focusing on the bottom rung, the first rung. We all know that wealth comes from owning assets. We have taken the ability away from millennials, from folks getting on the property rung. That is horrible. We need to fix that. All right, folks, that's my little bit of my rant. This is the Daily Financial News. I will be back tomorrow, Sunday the 29th, of course. We're going to do our live stream in just a few minutes, and students at 9 o'clock for a Zoom call, which, again, I have no idea how it's going to work, but I'm getting a little bit excited. It should be fun. All right, guys, take care. Bye.